Hello, today is October 28th, 2017. What I'd like to do today is first go over some general principles of how I trade, and at that point we'll review yesterday's calls and make the prediction for Monday. Well, I have some general principles. I try to make my predictions quite clear, but because of some private emails I received, some people don't understand what I'm saying. I'm sorry about that, but if you don't understand what a person's system is, don't risk your money. I think that's true for me and for anyone else too. Here's what I try to do. I try to predict the next day's price action in a concise manner. I do not try to hold positions overnight, predict what will happen overnight, and I don't stick to my prediction if the overnight price action changes the technical picture. The next day's open is a surrogate for the current day's close. When I make the prediction, I'm assuming that the current day's close reflects what the next day's open is going to be. If we gap strongly in the undesired direction, the technical picture has changed and the call is canceled. Now, based on my email, some people don't know the difference between a call which is canceled and a call which is wrong. Here's the difference. A cancel call costs me no money. A wrong call costs me money. And those who don't understand the difference don't risk money on the forecasts I make. Just for the record, I make a lot of calls which are canceled. I don't make a lot of calls that are wrong. Based on that, let's go back and review the last calls I made. This was Thursday's action. This was a very negative pattern to me. We gapped up, rallied, hit a new high, stopped right at resistance, and closed at the low. Closing at the low in this pattern, to me, is a very negative signal. And my plan for Friday was to look for places to go short. Before the open, we gapped up. Trading like this and closing at a low gives a sell signal, but the next day's open is a surrogate for Thursday's close, and this is a close at the high. At this point, there's no sell signal, there's no signal at all, and the call is canceled before we open. Now here's what I said. I said unless we gap up over these highs, lower prices should print. I said gapping up slightly wouldn't be enough, that we had to at least go over this high and ideally go over the all-time high. That's just what happened. So to me, the prediction worked. Anyway, we had some old MEJT targets. This one printed and there was a good resistance area. This one also printed. There wasn't much resistance there, although we didn't trade that much over it. We traded more than we usually do. The resistance doesn't have to hold. Now, what about, we also predicted we have a pattern with an early high, which we did. Now, what's going to happen Monday? Monday's pattern, I believe, is the one that tends to have an early high and tends to rally into the close. Most of the time it has a strong positive spin to it that doesn't preclude gapping down first. On those minority of occasions where it's not a positive thing, it can have a straight line move down. Now, we have a pattern where we gap up, hit new highs, can't hold on to this high, can't even hold to this high. This blue line is a close, couldn't hold on to the high. It's a very negative pattern based on the close. It should lead to lower prices. Now, if Monday's open is over this high, or if we gap up and trade over it shortly after the open, that negative signal is gone and the call's canceled. Let's take a look at what's important. We've had Friday's date as an important one for over a month. I have two independent systems, one of which is mine, one of which is somebody else, each calling for a significant change in trend on this date. As I've said, the system has some amazing hits and some complete misses, so it's a critical day to see if it's a change in trend or not. Trading over Friday's close triggers the stop loss on the demarked sell signals. And if we gap it down and we don't ever close over, the signals remain intact. If we trade under Friday's low, that triggers a Trader Vic 2B sell signal. So whether we go up or down will give us a signal in somebody else's work, which those folks consider to be significant. Now, my general plan is to look for 3,400 plus by the end of this rally, but that doesn't mean we'll go there in a straight line. Impressive as Friday's action was, it still is something I think reads easily as a three-wave move and not five. We're close to, again, 2-to-1 ratio. We're near a Gann fan line, so there is resistance from the line. While we had this strong rally, here's what happened to breadth. Here's where I thought the original high was. This could be a 2B top. Here was my count. All these ratios are being messed with by this recent rally. But if the prior high was the real high, and this is still a 2B top, these ratios don't change. The argument for this being a 2B top is this. We have a three-wave move down with C equal to twice A. We have an ABC up with C equal to A at the high. If this high holds, you can make a case that we'll have wave C down, and that this could be the real high and this just a ABC, an expanded flat. So we're looking for an exciting trade on Monday. The ideal situation for the bulls is to gap up strongly and take out this high. If that's true, a lot of these negative signals would be invalidated before the open. If you're a bear, the ideal thing is to gap down from the open, ideally gapping down under this low. That would signal a major top at Friday's high. So we'll have to see where we open, but if we don't gap over this, I think lower prices will print. That isn't a prediction. We'll close lower because the day tends to be positive, and I think the first hour's trade is going to clarify that issue, and that's today's call.